Hello everyone and welcome back to our midweek market analysis. I'm always your host Timothy Carrier, and it's been an amazing week. Just everything panning out as we had looked in our weekly analysis on Sunday. Gold made a all-time high of $21.35 per ounce, and after that we saw gold turning bearish. There was the downward movement, and I believe from the analysis that I gave on Sunday, you are able to capitalize on some moves. These are some of my trades that I took during the week so far, Monday and Tuesday. So this was Monday trading. This was on a 15 minutes time frame for gold, and these gave me a risk to reward ratio of 1:3. I also had this set up in the 5 minutes time frame. If you go to the 5 minutes time frame, you'll see the setup that I'm talking about. Here it was from the 15 minutes time frame. Again, the order block, bearish order block at supply zone. I took this order again. It gave me close to 1:3 risk to reward ratio, but basically 90 pips. This was 90 pips. To give me around 90 pips, as you can see. Then this first one gave me around 150 pips. Okay, it delivered 150, close to 150 pips. So that was Monday trading, and yesterday, let's see, the charts have disappeared. Let's see. Just a moment. Yesterday, I also got another entry. This was the yesterday's trading. This was from the 15 minutes time frame. And this was basically I think yeah, it was from the 30 minutes time frame. I had looked at this region here, so there was the supply zone at that level. Then during the London London Open, I took that as well. It gave me a risk to reward ratio 1:2.15. Again, it delivered 150 pips. So these are some of the trades that I have taken on Monday and on Tuesday. And today, as we wait for the market to open, as we wait for London session to begin, I am projecting, I have some setups that I have in place. But let's begin by basically looking at the dollar index. Okay, let's begin by looking at the dollar index. So with the dollar index, we begin from the weekly time frame. And you can see from the weekly time frame, basically we had identified that region, and the price is now trying to push towards that region. So there was a bounce off from this level that we were expecting, around 102.47. The price bounced off, and now we have that upward trajectory. So let me delete this lower drawings here so that you can be able to appreciate the price. So that is what we have, a retracement. Remember, here we have a supply zone. So from the weekly time frame, if it pushes up, then we shall be waiting for it to come to this supply area, so that now we can maybe probably look at DXY being bearish or turning bearish. The reason why the price might push up, or the DXY might push up, is because of the fundamentals that we have on Friday. We have key fundamentals, that is the non-farm payroll on Friday. And as per the projections, again, you can see basically everything seems to be everything seems like the data will come out positive, meaning that it will strengthen the dollar. So we might see the dollar index going a little bit more up on Friday. And this basically does not mean that's what the data will turn out, but I am basing on the previous and the forecast. Okay, so we have again to wait for the actual so that we can know which direction that we are going to take, or the positions that we are going to take based on on the actuals. Okay, so remember, I have always taught you to trade the smart way. Don't gamble with your hard-earned money. So on the daily time frame, this is what we have on the DXY. We can see there is a region of resistance around that level. So we want to see how the price pans out from this region. So this is an area of resistance. Okay, this is an area of resistance, and like the price is trying to do right now, it's trying to create a head and shoulder, but it is not yet formed. Okay, we can see that, then you can see that, then you can see that, then that, then you might see the price retrace maybe to that level, and then we see the price coming to retest this supply area that we have looked about. Okay, so probably it might pan out like that, but it's just appreciating what the market is trying to do. Okay, so that's what we have on the daily time frame. Okay, that's what we have on the daily time frame. This is a reversal pattern. That is the inverse head and shoulder. It becomes a reversal pattern, or a bullish momentum. Okay, so the reason why greater odds, depending on the data, if the data comes out positive as it is projected, then we shall see the DXY maybe probably come all maybe probably around these areas to retest this supply zone. Okay, so that's what we have from the daily. Then we look at the 4-hour time frame. Okay, so from the 4-hour time frame, you can see actually it has formed the it has begun, it has created what we call this is the BOS. Okay, this is the where the BOS happened, the break of structure. Okay, so this was the candle for the break of structure, and now the market came to retest, so it's trying to go up. It's creating higher highs and higher lows. Okay, it's creating higher highs and higher lows. So in the 4-hour, we can appreciate that maybe that DXY is trying to turn out to be bearish. Okay, to be bullish. So from this area of resistance, also we have within that area of resistance, we have a supply zone in the 4-hour region. We have that supply zone in the 4-hour region. So probably maybe the price might reach here, and maybe we see a retracement on the downside, or probably it might be a reaction point. Okay, so remember, not all demand and supply have high probability. Not all demand and supply regions are of high probability. There are some that are reaction point, that the price will reach here and maybe react slowly, like maybe 20-70 pips, and then it goes in the upside direction. Okay, how to identify that, I'll still teach you. There is a lot that I need to teach you, so it's just a matter of time, and I'll be preparing these videos and releasing them to you so that you can gain this knowledge for free. So again, from the 4-hour time frame, the reason why maybe we are projecting now we saw from the weekly time frame, we have this supply zone that we have marked, this region, and the reason why the price might go up to these levels, it's because of this imbalance. Okay, so this is imbalance. When you have these large sell consecutive candles, this becomes it's what we call imbalance, and the price does not move in an imbalanced manner. Okay, the price does not move in an imbalanced manner. It has to balance out. It has to cover all these imbalances. Okay, so the reason why, again, from the 4-hour time frame, we might see the price maybe try to come and cover some of these imbalances. Okay, maybe it can come up to that level, or it can cover the entire of the imbalance. Okay, so that's it for the DXY. From the 4-hour time frame. Basically with the DXY, I don't really like looking at lower time frames. If I do the weekly, daily, and 4-hour, it's enough to give me the directional bias. Okay, it's enough to give me the directional bias. But we can look at 1 hour as well. So you can see for 1 hour, this is what we have. Okay, so here, this is something that I'll teach you about market structure, because you understand that at this level, Let me try to mark it for you clearly so that you can see it. So this was the previous swing high. Okay, that was the previous swing high. That is the higher high. And then we have this which it created around this area. Okay, this was the major. So this was the major high, this was the major low. So right now the price went up, created another major high, and now it came again to create another major low. Okay, another major low. So still it's an uptrend. So there is no break in structure. Okay, there is no change of character. There is no change of character. We are still in an uptrend. Okay, we are still in an uptrend. So I will also teach you about how to identify market structure, how to identify BOS, how to identify the valid change of character. I'll still teach you also more on them so that you can be able to understand. So this way now we can see we are in an uptrend. Okay, you can see the price has been trading within that trend line. So this basically now says that for the DXY on the 1 hour time frame, we are uptrend. In the 4 hour time frame, it's an uptrend. On the daily time frame, let's see, on the daily time frame, this was the last swing high that it created, that the price created before creating the low at this level. Okay, so that was the high. So this is the lowest point that it created. So until it breaks this level, okay, until it breaks, the price is able to break through this level, then we shall say, once it breaks that level, we shall say on the daily time frame we have a BOS, and now we shall be looking for what? We shall conclude that it's an uptrend. So right now, weekly it's downtrend, daily it's downtrend, 4 hour it's uptrend, 1 hour it's uptrend. So for you to have a high probability entry, I like to see all the timelines from the weekly, daily, 4 hour and 1 hour align accordingly, such that weekly is either bullish, daily is bullish, 4 hour is bullish, and 1 hour is bullish. All 1 hour is bearish, 4 hour is bearish, daily is bearish, and weekly is bearish. Okay, it becomes a high probability now for you to get entries. Okay, so that is DXY. That is DXY for us. So we move to the next pair, which is gold. And like I said, gold created a new all-time high. Like we had seen in the previous weekly analysis, we have a new high. Okay, we have a new all-time high. So from the weekly time frame, basically we saw the price come and take out the previous highs, okay, the previous all-time high, and now it created a all-time high, and the price is trying to retrace now from that. You can see we have a very strong monthly candle, but still early. Today is on 6th. So let's see how the price will pan out. So here we have at this level, let me delete these regions. Let me delete all these that I've drawn here, so that we can have a clear preview of the chart. Okay, so that we can have a clear view of the chart. So from our weekly analysis, on Sunday, we looked at the various levels we looked at. We had anticipated the DXY to take out the previous all-time high, to create a all-time high, and then a retracement. Okay, we were anticipating a retracement, right? And the levels we were looking at, this was the first level, I remember. So this was the first level that we are looking at. Okay, so it came out very bullish. It went past 2043 because at this level we had a demand zone. Okay, we had a demand zone, but if you look from the 1 hour time frame, there was a reaction from this level. Once the price reached here, there was a reaction that gave us close to 50, around actually around 74 pips, before now retracing, before now continuing on the down movement. Okay, so what we have now at the moment, so after that level, we were also anticipating this other level, okay, because here we have an area of resistance again, and you can see the price reached now to that level of 2009, and there was an up. There was this now today. This is the today's candle. Still, it looks bearish. It looks bearish for me, but we want to see how far the price can be able to go. So on the daily time frame, probably the next level, okay, on the daily time frame, the next level that maybe we might want to see the price, it's at this level of 1987. We want to see the price around 1987, and then the next level that we might anticipate to see the price is around 1965. That is on the daily time frame. So we go to the lower time frame. Okay, we go to the lower time frame. That is the 4-hour. So in the 4-hour time frame, you can see that it's still very much bearish. It's still very much bearish. So we have this pattern that we have here. So it's trying to create. So this is like an head and shoulder. Okay, it's like an head and shoulder that is inverted. Okay, that is inverted. So this is how you look at it. Okay, remember I said you have to look the price with 360 degrees or 3D. Okay, so it went up, then it came again, there was that movement, and now there we are. So let's see what spans out. Let's see what spans out. This level we're still bearish, and I'll be looking at these zones. Okay, so I'll be looking at these zones to see this is the zone that I'm looking at from the higher time frame to see how the price pans out. So if it covers this entire this zone, now once I've marked this zone, how I do it now, I go to the 1-hour time frame and try now to be more precise. Okay, so you can see from the 1-hour time frame, yesterday we traded again these order block. We traded this as a supply zone. Okay, from the news. Sorry about that. We traded this from the news that we had around 6 p.m. So the price pushed up, came to this supply zone, and there was a sell-off again that gave us close to, I remember, close to 100 pips. It took only 100 pips, but it went around 151 pips. And right now the price is trying to come back to this region. But remember, we said once this supply area is tested, we want to trade it the first time when it is fresh. So I might now be waiting. Okay, I might be waiting for the price at this level. Okay, from the 1-hour time frame, this is a new zone, so I might be waiting. I'm looking the price now to reach these areas, probably on the 1-hour time frame. Okay, on the 1-hour time frame. So once it reaches here, probably we can get our sell entry. You can probably get our sell entry, and that will maybe probably give us. So you can see we have an high here, so price can come to take that high. The reason why I would want to put my stop loss around that level. And now I'll be anticipating, the first thing I want to see, I'll be anticipating the price to come and take the previous lows. This is the previous low, so we have some liquidity here. So I'll want to see the price come and take out these liquidities. Okay, that is from the 1-hour time frame. A risk to reward ratio of 1:2. Okay, a risk to reward ratio of 1:2. So if you narrow down again on the daily, on the maybe 30 minutes time frame, so from the 30 minutes time frame, again within this region that we identified here in the 4-hour time frame, we have a zone here that is very fresh as well. Okay, we have a zone here that is very fresh as well. So basically, if we have these two zones, I would want to wait for the price to reach this upper zone, okay, because we have two zones that are close to each other. So it will be high probability for me to wait until the price reaches to this upper zone, which becomes quite high probability, okay, which becomes quite high probability. But if I was to take a trade from here, then I will use the lowest risk possible. And if there is a retracement to this level, then now I would now take a high probability entry from that area. Okay, so if you go down again to the 15 minutes time frame, okay, if you go down to the 15 minutes time frame, you will see now we have these levels that we want to see the price react. We have this now region that we have identified in the 30 minutes time frame. Again, we have a region within it, this area of this candle. Okay, so it rhymes within the 30 minutes. That is an engulfing within an engulfing. So 30 minutes engulfing, 15 minutes engulfing within the same region. But now when you come now from the 1 hour time frame, the area that we had drawn from the 1 hour time frame, it becomes now even more precise. Okay, instead of this drawdown, then now, because you can see this, the trade, how it looks from the 1 hour time frame. So this is our entry. So all this is the supply zone in the 1 hour time frame. But when you come now to the 15 time frame, you narrow it down, and now you have a precise area that we probably want to look at. So there are chances that the price will come maybe to all the way to that level, because we have a fresh supply zone. Okay, we have a very fresh supply zone at that level. At this area now, if I take a trade here based on the 1 hour time frame, again, I will open with the lowest risk, anticipating the price to reach these levels. Okay, so if the price reaches at this level now, I can say like maybe probably I will increase my lot size. Or probably if I take from the 1 hour time frame, then I'll do what we call layering. Okay, so I begin with a small lot size. Once it comes here, maybe I open another position with a slightly higher lot size, etc., etc. Okay, so I did a video on layering, so it's good to go back and watch it, how we do layering, so it will become very much beneficial to you. Okay, so I believe you'll mark those areas, but allow me to go back to the 1 hour time frame. Okay, so from the 1 hour time frame, so this is the previous high that the high that it created before creating this low. Okay, the major high. Okay, here we are looking at the major highs. So this was the major high. Okay, this was the major high that it created here before now creating this low at this point, before creating this low at this point. Because you can see we had a low here, the high, then the low, then it created this high, and then it created this low. So these are the major highs and major lows. Okay, so right now the price is trading between the internal. Okay, right now the price is trading internally between these two areas of major highs and major low. So until there is a breakout from these major highs or major lows, then if there is a breakout on the upside, we say now the trend has changed. It's no longer bearish, but now bullish. If it breaks on the downside, then it's a continuation of the bearish momentum. Okay, it's a continuation of the bearish momentum. If you look at it in the 4 hour time frame, then you'll be able to see it clearly. This was a low that it created, then it created this high, came down to create this low. Let me open it up so that you can see this. Then we have this high. Okay, so this low is what culminated to this high. Okay, this low is what led to this high. Then there was a retracement. Okay, there was actually, this is not an high, so let me delete that so that it can be clear. So then the price came, I wanted to delete this. So the price came, after creating this, the price came downwards all the way to this area. So it created a new low. So right now the price is trading within the internal liquidity of this high and this low. So if there is a breakout on the upside from this high, we want to say now the trend has changed from the downside to the upside, from bearish to bullish. Okay, and if the price breaks on the lower side on this level, then we shall say that now this is a continuation of the bearish momentum. Okay, it's a continuation of the bearish momentum. So that's it for gold. That's it for gold. If it goes in the up direction, if it breaks this area on the upside, then we shall be anticipating now the next levels that we shall be looking at we shall be looking the price coming to these areas of 2065. Then we shall look at this area of 2085, and then this level of 21, etc. on the upside, okay, on the upside. But right now, even before we start looking on the upside, the high probability is that the price is bearish. So I have explained or shown you the areas to mark for bearish, and probably I've given even some potential entries that you can be able to take in this market, okay? So we now quickly look at GBP USD. Okay, we look at GBP USD, and with GBP USD, basically this is what we have from the 4-hour time frame. It's bearish. It looks bearish in the 4-hour time frame. I was waiting for the price to reach these levels so that I can be able to buy. Okay, so you can mark that region. It will be my buy region. Risk to reward ratio 1:3. So ensure you plan your risk accordingly. You plan proper risk management. And because the reason why I'm seeing that actually this trade can even go more than that, because we have some liquidities. We have a lot of liquidities resting above this in this area. We have this liquidity, we have liquidities here, we have liquidities here. So these liquidities act like magnets. They like to attract the price. So we might see even the price push up all the way to this region. So if but this is the key area to look at. Okay, this is the key area to look at. So right now there is a retracement. So we want to see maybe probably price retrace to this level, okay, to that level. Then we want to see a down movement. We want to see now a down movement, maybe now coming to push the price to reach these levels. Okay, so this is the level that we are looking at for bearish, and for sell entries. So we see that now the price may be coming all the way to this area. Okay, remember this was a breakout that was not retested. It's not yet retested yet. You can see the breakout, then the price went, there is no retest. Again, we can be able to explain this up movement here. This was the neckline. This is where we have the neckline. Okay, this is where we have the neckline. And so after the breakout of the neckline, okay, so this is the breakout. This was the breakout candle. So after the breakout, we have the retest. So this retest might project all the way to this level because of this supply zone that we have here. And then we might see the price push down to this level. Okay, we shall see the price push down to that level. So on the 1 hour time frame, still the price is downtrend. Okay, so you can see there was a downtrend, then there was this ranging. Okay, remember we said when the price ranges in this form of a rectangle, it's bearish. What? A bearish rectangle, continuation of the bearish movement. So there was the breakout, now the retest coming, and then we're anticipating the price to push down, maybe probably to this place, to that place. So this area, it's a potential buy entry. It's a potential buy entry. But if this area is not respected, the price might come all the way to this level. Okay, the price might come all the way to these levels around that region. Okay, all the way to that level. Again, here we have so this is the area of interest. This is the area of interest. Okay, so we can redefine this entry here now on the daily time frame. From the 4-hour time frame, we can redefine the entry, because here we have as a demand zone that is not tested on the 1-hour time frame, resting within the 4-hour time frame demand zone. So here you might want to have the lowest risk possible and taking a position from this level, but if it retraces to this level, you can add another buy entry, or you can wait for the price to come to this level and take a buy entry. Okay, the key thing is to ensure that you practice proper risk management. Okay, that is the surest strategy in forex trading. proper risk management. If these areas are violated, then the price can come all the way to this region. Okay, the price can come all the way to these areas. Okay, it can come all the way to these areas. So if it comes all the way to this area, then it will become even a more high probability trade. Okay, it will become even a more high probability trade, because here we will have what we have here. Basically, this is what we have. Okay, so this is the change of BOS, break in structure. Okay, there was the break in structure, and after the break in structure from this level, now the price might come back again to this level to retest it. Okay, so ensure you practice proper risk management. We actually take what the market gives us. Okay, we take what the market gives us. No one can be able to corner the market 100%. No one can be able to corner the market 100%. And the reason why we act as the price, we react after. We react to what the price gives us. Okay, we react to what the price gives us. If you want to redefine your entries, you can mark these areas, and then you go even to the 15 minutes time frame, 30 minutes time frame, like I've shown you with the gold pair, so that you can be able to look for more precise entries. Okay, so then we have Euro USD. Okay, Euro USD. With the Euro USD, basically, this is what we had a setup here that failed. Okay, remember, like I said, no one can be able to predict the market 100%. So this setup was activated and it only gave very minimal pips. That's around 27 pips, and it continued on the downside. Okay, so this was a failed setup. Remember, I said risk management is key, so you have to practice proper risk management. Okay, so from this, allow me to delete this so that you can have. So this was the channel that the price had been moving on the previous, from the 4-hour. So I can delete that channel as well, so that you can have a clear view of what the market is doing at the moment. So like I said, when we have this is in balance. Okay, so the price can come all the way to these levels. Okay, we have an area of supply, of demand to that level, so the price has higher chances of coming all the way to these levels. Okay, so this even gives us higher odds that even GBPUSD might try to drop all the way to the levels that I showed you. So what we are looking at, you can see this was the sell. The reason of this sell-off here is because we had a region here that was respected. We had a supply zone that was respected yesterday. So this was the selling for yesterday. But I did not catch this sell. I did not catch it. I was so much into trading gold, so I did not get that selling opportunity. So from the 4-hour time frame, we have a downtrend. Okay, we have a downtrend. So if the price comes up and breaks this level, then there'll be a change. Okay, you can say, we will say that there'll be a change, but we're anticipating maybe the price might come to this area. Okay, it might come to all that area, because that is an area of resistance. Okay, that's an area of resistance. So we might see the price push up maybe to that level, and then push on the downside to come all the way to these levels. Okay, so these are nice areas to look for your buy entries. These areas here, they are nice areas to look for buy entries, and we can have it marked in this manner. Okay, so before we even mark it, so we want to see how the price reacts to that level. Okay, but again, on it below here, we have another key area. Okay, we have another key area. So what I want to see now is probably the price. Since these are areas that are close to each other, I would want to see the price come all the way to these levels. Okay, so this is where I would want to take my buy entries from. Okay, this is where I will want to take my buy entry. So mark it at that, and then my stop loss will be slightly at that that level. Remember, we have liquidity here, so we want to give market some room slightly. Okay, we want to give market some room slightly, and then we might see the prices push up maybe to around that area. A risk to reward ratio of 1 is 1.2, 1 is to 2.92. Okay, but if the price breaches these levels, then again we'll be anticipating the price on the downside, the price to reach to come to 1.06531 to take out these liquidities. Then the other level on the downside that we might be trying to look at is these levels, okay, around 1.06098. And then the other area that we want to look at is this region here where we have some liquidities, okay, where we have some liquidities around 1.05169. The reason why I'm basically looking so much on the bearish movement is because right now we are in a bearish movement, and the data on Friday, the NFP data on Friday for the dollar, according to the projection, is that the data might be higher chances is that the data might be positive. Okay, is that the data might be positive. So if the data comes out positive, then the dollar will gain strength, meaning that anything that has dollar as quote currency, we shall be selling. Okay, anything that has dollar as quote currency, we shall be selling. That is EURUSD, GBPUSD, and even gold. Okay, and anything that has a dollar as the base currency, we shall be buying. So anything that has the dollar as quote currency, we sell. Anything that has the dollar as the base currency, we buy. Okay, if the data comes out positive. But if the data comes out negative, then we shall be looking at the opposite. Maybe for EURUSD, GBPUSD, and gold, we shall be looking for buy entries. Okay, so that's it. Fundamentally, that's it technically. So the key thing is to mark your charts accordingly, and you wait to take an entry. Okay, so you can take your entries, you can redefine your entries. Once you mark these areas, you go to the lower time frames so that you can try to minimize the risk bit of it, and so that you can have what we call sniper entries. Okay, the lower time frames will be able to give you what we call sniper entries. So that's it for me. I know we have a lot that we need to cover. We have a lot that I need to teach you, but I'll try as much as I can to ensure that I deliver quality education. I deliver to you quality education so as to enhance your forex trading skills and to ensure that you are in your journey to becoming successful and a profitable trader. Okay, so thank you so much. Have yourself a wonderful Wednesday, and let's see what the market gives us. Okay, we wait to see what the market gives us. Thank you, and all the best in your trading.